Right, everything looking good. We are live. Not really sure what's been going on lately with these streams. Seems like YouTube's been struggling, so hopefully everything's coming through loud and clear. Definitely had the mic turned on, so that's a good start. All right, so let's go ahead and jump right in. Obviously, as always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, appreciate that, Durwood. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market outlook. It is 8:03 p.m. Eastern Standard Time on 12/18/2022. And let's go ahead and jump right in because we already hit you with the disclaimer. All right, so obviously not a lot happened over the weekend. We did skip that Friday stream. Hopefully you guys been enjoying all of the static videos. Hopefully they more than make up for that extra day streaming. But hopefully they'll help with visibility. So here is the TNX. We're going to start right here on the daily. So we see basically still hanging out at that previous high right here, and we're finding support at that level. We're starting to build some momentum on the indicator oscillators. Hard buy signal coming out of the bearish control zone. Bunch of green histograms. Price has not really gone anywhere so far. Not crazy to think that we get another push down here to the 200s, but likely this is setting up for a rally, at least like short to medium term, in my opinion. Onto oil. So we saw oil has been in that consolidation downtrend, back tested the 200s multiple times and got rejected. We're now confirming into a bear market, or have confirmed into a bear market, went down to new lows, back tested the breakdown. And now, honestly, at this point in time, I mean, we were in that little channel right there. We kind of double top. We came back down, revisited the bottom, tried to push back up here, got rejected, broke down, couldn't get back inside the channel, and now we closed back out of it again. Seems like we're headed back down here. You guys know how I feel. Once we make it past the 786, probability of a reversal at the 886 is almost zero. So at that point in time, it seems more likely than not we're coming down here to, essentially round trip. I mean, this is the whole move up here, and we've given back 78%, almost 80% of it if we go down to the wicks here. So 80% of the move is gone. So anybody that got into energy December 2021, aka the beginning of 2022, and then rode it out from 2022 beginning of the year to 2022 end of the year, went from essentially, being potentially up 100% or doubling their money to essentially now being up 13%, which 13% isn't bad unless you compare it to, if you would have sold up near the top or literally anywhere else, being up substantially more. So obviously it's a big deal if it's the difference between 100% return on an investment or a 12 or 13% that you can now potentially lock in, because who knows? We're likely going lower. And you guys know I look at this as an A, a B, a C. We had an A channel consolidation, a B ascending channel consolidation, and it appears that we're starting to form another, essentially a C descending channel consolidation. Now, it's still a little early to kind of see a channel right here, and it's a little tight, but we can already see something along these lines is forming. So if we're just basically starting to form another channel right here, and then we just take the range, the length of the previous channel from the top to the bottom, that's all that red arrow is. So it's essentially just that same move. Assuming we had an A, a B, and then an equal length C, that would take us roughly down here to the 382, and that's about $60. You guys know my target is somewhere between like $60 to $62. And, it sounded crazy when we're up here at, 120, 130. Everybody else is calling for $250 oil or $400 oil or $500 oil. But your boy, who called for the target way, way, way in advance, was able to take profits at these levels. And now here we are sitting back at my potential entry point, or near my potential entry point. Now, obviously, we're going to wait for some sign of bottoming, bullish divergence, or something along those lines. Not crazy to think, though, that this is what we've been talking about literally for, at this point in time, it's not even months anymore. It's a year or years, aka year plural. But the truth is, we know exactly what happens every time we see the four horsemen ride. And that's our semiconductors, the yield curve or inversion, however you want to look at it, transportation sector, and then of course the final horseman, the horseman of the apocalypse, is obviously energy spike. Every time we have an energy spike of 50% or more, and all three of those things have happened prior to the lead up, we end up basically getting like recession/depression. Whatever you want to call the Rona dump right here. Obviously, that started in August of 2018, technically, when we peaked out here. But right before that rollover was, obviously we were able to save it with some manipulation, whatever, massive pumping, creation of M2 money supply, basically like world stimulus checks. That being said, prior to that, this was 2008 peak right here and crash. We know obviously 2008 global financial crisis, or real estate bubble burst, etc. And then obviously we have in 2000 as well. We pump up here and then we see a breakdown back to retest the 200s. Now we've seen other spikes at 90 and 96 right here, a couple along the way. But the most important thing is before the big sell-offs, we always see a spike up in oil. You could say that it's, the cause. You could say it's the cure. You could say one is the catalyst. You could say they're correlated, or, correlation causation argument. But it doesn't really matter, if the increased price in oil is what causes the recession or depression, or if it's just a symptom or, a result. The fact of the matter is that in order for those big dumps to happen, we always see those signs in advance. So even here, when it already looked weak for literally, decades, going back to our previous high, 2008, we hadn't put in a new high that whole entire time. And then we see that capitulation move. Prior to the capitulation move happening, we already see, semiconductors had topped out, obviously yields, all that good stuff, the Fed pivot, all that juicy stuff that we always look out for. So very, very important to see now in hindsight, this move right here looks a lot more like what we were discussing in advance, which is basically, we're confirming into a bull market. We get basically a spike top, double top, and then we roll back over and retest our 200s. So on the weekly, we're back retesting the 200 exponential. The 200 simple is slightly lower in the low 60s. Not crazy to think that actually, if this level holds over the next few months, maybe we go sideways for a bit, and then eventually, we start into a massive bull run. Could this level fail? We lose 65. We start consolidating down here. The moving averages roll back over, and then we just go back into a bear market. Definitely a possibility as well. I'm still very bullish on oil. You guys all know that if you've been following the channel for any amount of time. But the truth is, you can be late and you're wrong, or you can be early and you're still wrong. You have to be right on time as well as direction. So then on to the VIX. So we've been talking about this VIX obviously for some time. We found that bottom down here, got that pretty aggressive move up, like literally in a matter of days, 25% back test of the 200s. And then the majority of that came back off, obviously with options expirations and everybody using short-term, options or hedges as opposed to long-term, which would show up in the VIX. We've seen some crazy kind of moves lately, and what should have been probably a spike in volatility that just has not come. Now, it does not mean that that's not about to come. So essentially, if we hold this range down here, I still think that we're likely to surge back up, retest the ascending green line and possibly the descending red line, because as far as I'm concerned, we're still just trading in this range right here. We had a little channel on the way up. We broke down from that channel. That's okay. The fact of the matter is it's still higher lows and it's still lower highs. So we're basically just wedging into this range. And, at this point in time, we're back down at the bottom of the range again. We're at the bottom of the range here, surged 25%, gave most of it back. Not crazy to think we're going to surge up here another 50%. So Dow Jones, all right, so this is it. The Dow was basically leading the entire market, making it look like things were better than it was. And we talked about it specifically. We said, okay, some point in time, this Dow is going to break, come back down here and retest the 200s. If it holds above these levels, we'll start confirming into a bull run, and it's back to the races. We're only a couple % off the highs, and discuss specific scenarios where, essentially foreign investments could actually skyrocket the Dow to new all-time highs. That was looking like the scenario, and still potentially is, if the 200 exponential and simple hold right here. Now, you guys know my base case is that this is just a massive fake out, and that, especially when we take out a high like this and then that level doesn't hold, almost always that's a failed breakout or throw over or something along those lines, and we typically come back down to retest the lows. Now, it doesn't have to happen necessarily, but a lot of the good looking stuff that was being, essentially printed on this chart is starting to go away. So we have a series of lower highs and lower lows on the way down. We then get a burst out to the upside. We come up, put in a slightly higher high than the previous one. Everyone gets very bullish, and then we start to roll back over. Pretty aggressive rejection right here, back test of the 21. Looks like if this level doesn't hold, it looks like the Dow is going to come back down here to 30,000, roughly 366, and test it again. So we have to be very careful of that move to come. Even if we don't put in a new low, we discussed the scenario in advance, and essentially what we talked about was it looked like there was a possibility. And of course, whenever we're speculating into the future on something that hasn't actually happened yet, it's purely that, it's speculation. But when it comes true, obviously, we can look back at it and say, oh, that's cool and convenient. I wonder what that's all about. So essentially what I'm looking at is the potential for something like this. You know, we don't know exactly how it's going to happen. We kind of have like a little thing right here, but essentially this is what I'm looking at. Okay, we have a left shoulder, we have a head, back up to an ascending neckline, which is actually like kind of bullish. And then we come back down here roughly to retest the 200s, roughly to retest the pre-Rona highs for like a third test on that. Come somewhere back down around this range. That's going to look like a potential buying opportunity. As momentum comes down here, this retest the zero line and retest the blue slope line as price action comes down here. And then that's going to give us potential for that move all the way back up to basically where we're at right now, 14%. And then if and when, you know, this breaks out, and this could take, you know, this might never happen, or it might happen, you know, in a couple months. It might happen sometime next year. We don't know. But if we do get the breakout, you know, all it is the measure move from the bottom of the head to the neckline. And if we just look at that, you know, that's going to take us back to new all-time highs up here to roughly like 40,000 plus, 41,000. So does it have to happen? No. Is it worth paying attention to when we get down here? Because I'm going to tell you exactly what's going to happen again. Everybody's going to get really bullish at the top, like always. And then everybody's going to get really bearish at the bottom, like always. So when we get down here at the bottom, the last thing we want to do is get overly bearish. The time to be bearish was, you know, a couple weeks ago or now. So we will see. And even I said specifically to you guys, I said, look, there's a lot of contradictory information right now. A lot of stuff tells us we're going higher. A lot of stuff tells us we're going lower. Feels like a fake out, but you know, we got to trust the charts. And obviously that's why we've been monitoring the Dow specifically and the individual top 10 components that make up over 50% of the Dow on literally every single stream, because it's so damn important. So that being said, we basically gave back that entire month worth of gains as we broke above the 821. So we lost 821, got the bear cross. It was starting to look bad. And then we actually did like a V bottom, like, you know, Rona type scenario without the bailout of the Federal Reserve. Now, did that come on the heels of, you know, essentially the market speculating that the Fed would pivot, or that they would pause, or that they would, you know, play hanky panky, or whatever the new thing is for like the, hey, things are getting bad, but they're getting bad less fast. So that's good. And by getting bad, I mean rates going up, whatever, regardless, we gave back that entire move. We're back down here at support. There's still 12 days left this month. Let's see what happens. If we hold above this level, it actually just looks like a break, a retest, and then potential for continuation. If we don't, if we lose this level and the bear cross looks like it's about to happen again, that is basically that double dip scenario where we talked about like this, where we basically come down, we push back up, everything looks gravy, like we're going back to new all-time highs, and then all of a sudden we start rolling back over and the cross gets, you know, either unconfirmed or it just goes from a bull cross to a bear cross, whatever, and then we go back down to new lows. So at this point in time, it seems like there's at least high potential for that to happen, and is worth paying attention to. Now, we are seeing obviously some varying signals on the indicator oscillators. We'll look for some more bearish or bullish divergence accordingly. So now on to the rest of the indicator oscillators, aka the lie detector. So we saw that obviously the Dow Jones was lying to us. Everybody thought that this, that, and the other. We heard about small caps leading us out of the recession. We heard about, you know, speculative trash that's unprofitable and why that was going to surge, because whenever we come out of recessions, that's like the top performing index. We heard that it was going to be services. We heard that it was going to be industrials. We heard that it was going to be emerging markets. We heard a bunch of bullshit, and obviously none of it played out, including all the people that were late to the oil party. So that being said, here we are on the SPY, aka the lie detector. And what do we see on this thing? A much, much clearer picture. No lies right here, okay? This is as straight up as gets. We have a high, a low, a lower high, a lower low, another lower low, a lower high, a lower low, and then look, another lower high. We back tested the top of our descending, broadening wedge perfectly, tops and bottoms along the way, and we also back tested the 200 exponential and simple, which once again confirmed that we're in a bear market and the breakdown or meltdown is fully in progress. Now, if we zoom out here, and again, I'm not a huge fan of, you know, certain tools or whatever, and some are much more reliable than others. Obviously, I'm a big fan of fibs and moving averages, but also like the idea of Elliott wave and stuff like that. Well, here is one that's not very reliable, okay? I just took this right here, this little print. Let me just go back over here. I just took our previous breakdown and just like superimposed it over top of what's going on right here to see, hey, what would it look like roughly if we had a similar move? Let me switch over to the monthly really quick. what would it look like if we had basically, a similar move to like the 2008 crash? So all I did was just take that exact move right here and just superimpose it. Now, it's not super reliable or anything like that, but assuming we're topping out right here, I mean, we're following that pretty damn well. And it's pointing to like almost a straight drop off back to retest like that 246 level, aka the pre-Rona highs, aka the 200 exponential and 200 simple. Now, is it a complete coincidence that we literally went parabolic? And if we superimpose that exact move on the exact move that happened right here, that it lines up perfectly with the 200 exponential, the 200 simple, and the previous lows from COVID, is that a complete coincidence? Or is there some sort of algorithmic, something or another going on here? Is there some fibception going on here? Yeah, probably all that stuff. So yeah, it's probably a coincidence, but also it's probably just, basic math. So that being said, do I think this is going to happen? Does this have to happen? Are we getting ready to have a straight up meltdown? No, not necessarily. But let's just hypothetically say you came back from the future. And by you, I mean me, because I don't even know you. So I'm not going to trust anything you say, especially if you start talking about you're from the future. So let's just say it's me. I come back from the future. Obviously, once the shock effect gets through and then I start telling myself, hey, this is what happens in the future. Actually, we consolidate in this range and put in lower highs and lower lows. And then eventually what happens is what always happens. We eventually break out of that range, and we break out of the range. Oh no, to the downside though, not to the upside like we're hoping. So then what is the measure move roughly from the breakout to the downside? Well, I mean, it's roughly down here to, somewhere near the target that we're looking for. So is it crazy to think that we have a breakout, but instead of the breakout being to the upside, which everyone's hoping for, the breakout is to the downside, and that breakout actually just leads us to retest key levels like monthly moving averages and previous swing lows from 2019 as well as 2020? Yeah, I don't think any of that's crazy. Matter of fact, it's probably going to happen. So, I mean, we'll see. I'm not counting on that. That's not, my base case scenario. But as this continues to literally play out exactly like, last time, or 2008, I should say, doesn't seem too crazy now. So we'll see what happens. Obviously, S&P still looks like straight trash. Hot garbage. So then on to the Qs. We got that triple Q. That tech juice, the tech juice was on the loose there for a second, broke above that descending resistance right here. And then what happened? Instead of getting that W, double bottom, breakout, measure move, that bust a nut up here to our target, the 200 exponential and simple moving averages and measure move, instead we get this pathetic little consolidation and then eventually breakdown. So now we're literally, we're dollars off of the lows here. Depending where you're going to, we're about 7% back from the lows. So if we lose 7%, we're right back at the lows again on the Qs. Very, very bad. Looks terrible. When we look at the longer term time frames on these things, the monthly, what really happened? We were bullish forever. People are like, you're never bullish. You're mean. You hate assets. Oh, you're a forever bear. Well, let's see. From 2009, October 2009 till July 2022. So for 13 years, I was bullish. And now the market says, hey, actually, if there's ever going to be a crash, if any bad shit is ever going to happen, first, you know what happens every time? The 8 and 21 bear cross. So, of course, if the danger is, a massive fall from the 821 bear cross till it crosses up again, or just to the lows, 73% downside. So do I want to get out of the way if I see a massive cement truck towing a train, with a crane on the back being driven by, turbo thrusters directly at me? Or do I want to try to run across the road really quick? No, I'm going to get the fuck out of the way. And that's what's happening right now. We're out the fucking way. Okay? And that's what we're going to keep doing, because this still looks like hot garbage. We're in the bearish control zone, red slope line, all red histograms. We're still below the 8 and 21 bear cross, like literally pennies off of the lows. If the month ends like a couple days from now, and we just so happen to sell off like $6 on the triple Qs, we're putting in a new monthly close, the lowest close of the cycle. Not cool, guys. Not cool. You all know this, but again, we've been talking about how everybody gets very, very bullish at the top and very, very bearish at the bottom. And remember, everybody was very, very bullish, and we're keeping a cool head. We even talked about the specific scenario where actually the Dow Jones does really well and everything else is just hot garbage. And is that still a possibility? According to the chart, yes. So IWM, the Russell, the old Ruddy. I mean, it's rough. Rejected right at the 200 exponential and simple. Rejected right at the resistance line. Again, very, very technical. And what is this forming? We talked about this exact scenario. If we come back down here and retest the lows, we now just have a descending triangle. And probability is we have a leg in, a descending triangle. We break down from that leg. And typically what we're going to get is, once again, that measure move, roughly the median of the actual pattern itself is like, a little more on the conservative side of a potential breakdown. But I mean, the truth is that usually like the leg itself in is the measure of the break. So, we're talking about, again, a very, very deep retrace potentially into like the low hundreds. Now we'll see. It doesn't necessarily have to happen. We could easily come back down here, get another bounce, and then push back up here, and just consolidate in this range. I mean, matter of fact, it could be April 2023 and we're still bouncing around in this range and nothing will have changed, bearish or bullish. So the fact of the matter is, I mean, it still looks like trash. A lot of this stuff looks like trash. So energy sector, obviously that double top, that blow off top, looking pretty clear right now. We're seeing a lot of bearish signs. Obviously we have the 200 exponential and simple here, potentially get a bounce, but overall looking bearish. So going to skip a couple of those. Whoops. My bad. All right, there we go. Okay, so DXY is next right here. So looking at the DXY, matter of fact, I'm going to go ahead and skip over this because I did a detailed breakdown of this in today's video. So if you haven't checked out the static video, just go watch that. Next, we have Tesla. So we've been talking about Tesla for a while now, and this pattern we were basically operating inside of, and now we have broken down from the bottom of the pattern. Now, the most important thing to pay attention to, obviously, one, we came down here, basically closed at that level and then sold off. But here we have this descending channel, and we're basically, selling off in that descending channel. So we're still in this little micro channel, but we broke down from the macro channel. So as long as we're in this little micro channel, it's probably just going to continue on here and just keep selling off down to our next target, which is essentially, a couple dollars away, back down here at like 138. So we'll potentially reevaluate at the macro 382 when we get there, or, the 0.5 down here with the blue and the green fib lining up. So we have some clear targets here. But the truth is, we find out, obviously, Elon is selling again. This whole Twitter situation is not playing out nicely. It's not looking good. He's basically just having to sell Tesla stock to keep Twitter ahead, to pay loans on leverage positions, basically, that he used to buy this company. So that is not necessarily good. Now, what we have to pay attention to is the potential of triple bullish divergence right here, still building. But to tell you the truth, as soon as I found out about a certain incident, and it's not Elon selling, I was basically good on this trade. I'm out, have no interest in it anymore. Cathie Wood came out and said that she has been buying Tesla hand and fist, buying the dip. So obviously the second I find out that Cathie is purchasing anything, especially something that I have recently purchased or speculated on or traded, the first thing I do is immediately just punch myself in the nuts repeatedly until the level of exhaustion. And then after that, after I stop peeing blood, after my balls recover, I reevaluate my life choices. And essentially at this point in time, I know that anything Cathie Wood touches turns to absolute shit. So obviously I don't want anything to do with Tesla as long as she is still all about this game. So, all right, so on to Microsoft. So Microsoft, not looking particularly great. Back down here, retesting the 382. So we took profits on that trade setup. It worked out very nicely. Quick little 23%. Back testing the 382 now. If we lose this level, we're likely just coming back down to that same level once again, potentially going lower. But there is quite a bit of support here at 241 for now. So Apple finally got the breakdown as expected. Obviously, we're still expecting this trade setup to play out. So the previous low right here could potentially be support around 129. We are just basically busting through these last couple lows right here. So a couple percent off that 130 move. But you guys know, obviously, the trade setup is still to the downside for that 31% move at about 116. Once we get down there, we'll reevaluate and look for a potential backtest scalp to the upside. But Apple playing out just as expected. Remember, too, Where did we get bearish on Apple? At the absolute top, right when everybody else was the most bullish on Apple, and all you heard was just how great Apple was and how Apple had shot up 28% and get excited and all this crap. And then what really happens? The absolute top. Shorted the absolute top. So congratulations on not going with the flow or just being part of the masses. So Google is next. Obviously not looking so hot. A couple percent off the lows. If we lose 86.94, it's a way down to our next target, the 618 at about 76. We got Meta, the M in magma, back testing resistance. So we broke down from the support, gap down, back tested it. Again, everybody's going to get super bullish right now on Meta and talk about how it's going to head up here and there's so much potential in it. I would be very, very careful on this thing because it's literally bleeding billions of dollars into the Metroverse. And obviously, you know, it's trash. Now, 5 years from now, is it still going to be trash? No, not necessarily, but people don't like when you're essentially like lighting billions of dollars on fire for something that's not tangible for like years into the future. And then even if the metaverse was like ready and just like debuted tomorrow and it was ready to go, I mean, does anybody give a shit? Like, does anybody want to use the Metroverse? I mean, I don't know. You tell me. Does the metaverse already exist? Is it the internet? I mean, I don't know. I'm not sure what value it adds. So we'll see, but I know what value it takes away, and that's billions of dollars in free cash flow. And then finally, Amazon, literally at the lows. I mean, we're pennies away from closing a new low, a new cycle low. This thing is just continuing to melt down. I know Amazon, obviously, massive gains from the pandemic. They're all gone. They're all gone. Matter of fact, if you bought Amazon in 2018 in June on some fateful day, and you just said, this seems like a good time to buy Amazon, you literally rode it all the way to the upside. Massive, massive pump to the upside, 118%. And now you're right back where you damn started. And the truth is, we basically will have round trip this entire move. And it looks like, you know, likely where we're headed down to is about 65 bucks. So get ready for that $65 holla if Amazon decides to break down from this level. All right, let's look at some, actually, let's just rip through these real quick because a bunch of these are from the static videos. So gold hanging on to the 200 exponential and simple moving average for now, printing bearish divergence on the daily, not great, but if it consolidates here long enough, it starts looking okay. The moving averages start turning up and all of a sudden it doesn't look so bad. Silver broke out of our little range, got the measure move, came up to our target. It's on top of 200 exponential and simple. Of course, the silver gang is super excited. 25 is a real big area to get through. If we get through 25, it's going to look a lot better. We're not seeing the same bearish divergence on the histograms here. We are seeing clear bearish divergence on the stochastics here and the jewel thief. So get ready for silver to have an absolute meltdown, and all the little monkey boys out there and the little apes and, you know, what other like monkey related derogatory terms that they refer to themselves as, to get absolutely wrecked once again in the least liquid asset on planet Earth. Maybe not the least, but pretty fucking close. It's like not that it's that illiquid. You could definitely just go to the pawn shop and sell your silver. But let's just say hypothetically, you bought silver. Let's just go back here really quick and talk about why silver is the worst investment ever. Let's just say hypothetically, you're a goddamn genius and you bought silver at the absolute bottom right here at whatever it was, $18, $17.50, let's say, and you just rode this thing. You know, like a spring break girl, 33% upside right here. You just rode that silver to the upside. That's pretty good, right? From 17.55 till 23.32. That's like $6. We just rode this thing up. Congratulations on your 32% gains. Oh, wait. How much are the premiums on silver right now? Oh, okay. So you bought $17.50 silver plus the $6 premium. So you just went from 17.50 to 23.50. Oh, and here we are at 23.32. So congratulations. The maximum move to the upside without breaking out of the range is just enough for you to break even. And let's just say that you've got expensive taste. You like that fancy stuff. You like that good, that US silver, a little bit of them eagles. Maybe you want some maple leaves, or perhaps you're into, you know, some of the other various Britannias, or, you know, name any other random central bank like or a government silver here. You paid even more than that. You probably paid what, $9, $10, $12 premium on Eagles. So congratulations. You know, you bought your Eagles at $17 with the $12 premium. So, you know, over 30 bucks in these things. And that's just a break even. I mean, it's just not, silver is just a really, really, really bad investment when the premiums are this high. Now, keep in mind, I didn't start trading, buying, you know, silver in the last couple of years. So I have historical reference. And anyone that's been a while, like around for a while, knows what like historical silver premiums are. Okay. And let's just go to the weekly chart and I'll show you specifically some areas where, you know, I was accumulating silver. Okay. Down in like the $14 and $15 range right here. You know how hated silver was when it had been hanging out in the $14 and $15 range from 2014 till basically 2020? 6 years of just sideways consolidation at the lows. You know what the premiums were on silver? They were like 35 to 50 cents. 35 to 50 cents per ounce. And now the premiums are easily $6 to $12 per ounce. So, I mean, we're talking about ridiculous 10 and 20 times. I mean, it was like $4 for Eagles back here, like premium. You know, if you were buying regular silver for like 15 bucks, you were buying Eagles for probably 19. So that being said, you know, we're talking about like triple the premium on Eagles and 10x the premium on, you know, regular silver. That's ridiculous. Okay. And this is not because there's some crazy shortage and they're draining the COMEX and there's no silver. No, that's not why. It's the greed of the people in between the producers and the end customer. That is where the premiums come from. That you can say it's supply and demand. You could say that people manipulate gold and silver prices to the downside. Well, when people are charging ridiculous premiums like this, if there's any manipulation going on, it's right fucking here. Because there is absolutely no reason. And the argument that all the silver people say is, well, no, that's the real price. The spot price is fake. It's paper price. The real price is this. So that's it. Oh, okay. All right. So I guess we'll see in time. But that's not how things work. So silver juniors breaking back down below the 200 exponential, not looking so hot. We got GSG commodity index just put in a recent new low below resistance. Bear market, not looking good. We do see a little bit of signs of like some potential exhaustion here, but we'll see. I mean, we're just basically breaking down from this level. I don't know if we're going to get some big surge back to the upside suddenly. Now, commodities, we could see a big surge in commodities if the DXY continues to strengthen. So LNG, Cheniere Energy, almost down to our target, very, very close to the white resistance, turn support line, and also the 200s at 149, expecting that in the next couple days. Mosaic fertilizer, again, breaking back down, getting ready to retest those lows. If we lose 42, which should be a strong support right here, it's going to look, again, descending triangle right here. If we come down, retest that level again, sure, maybe we get a bounce back up to like 50, but it's just a series of, you know, lower highs with a horizontal low. Eventually we eat through those buy orders and we break down to our target at 33. CCJ, we just did a long form video. Tilray, we just did a long form video. UNH, United Health Group. So here's on to our Dow Jones big movers. So we obviously have this ascending triangle. Exactly what we said happened. We topped out again. We're back testing the 200s and the ascending green support line. If we lose that line and this breaks out to the downside, we likely retest the lows. And that's going to look really, really bad for the entire market, especially the Dow Jones, as this is the number one by weight, stock in the Dow Jones. So likely what happens, we find support here and push back up and retest 550 and just keep oscillating. But, we have been in this range for some time and it's getting tight like a tiger. We're winding up this spring and it is ready to bust. Okay. So which way is it going to bust? Stay tuned to find out. HD Home Depot. Okay. So this is what we had talked about. Not necessarily a bad thing, but not great right now either. So we have this W double bottom, which is typically a very reliable pattern. Typically when you break above it, you come back down, you get the retest. That's exactly what happened. We talk about this potential scenario for a move up here to either the 786 or 886, in which we could actually continue to go lower. The problem is this took so long to break out. All these other big names in the Dow already had busted and moved. So now this thing is literally just sitting here waiting on that pivot point. The Dow is at the 200 exponential and simple, back testing them. This is still up higher, but it's holding, around support resistance for now. So if the Dow drops further, this likely comes down to the 200 exponential and simple, and the W doesn't look nearly as technically sound. It will look like a failed breakout then, likely. Doesn't mean it can't still go up, but it's not going to look nearly as good. If the Dow goes down and retests the 200s and this holds right here, this will look extremely strong because likely the Dow will bounce the 200s and get a pushback to the upside. So I wouldn't rule this one out just yet, but also, maybe time to count this one as an L, potentially. Or, I don't like to typically extend stop losses or whatever, but arguably, if you were like, I'm still confident in this trade, we had a really tight, like 4% stop loss, you could put it down below the 200s. I don't like the technical setup of that nearly as much because basically we're counting on the breakout holding right here. So we'll see, but we also talked about the scenario where we come down, retest the 200s, and then we actually use that as an entry. So I'm not going to rule it out, but it's important to stick to your stops if you have a predefined stop loss and trade setup like target range, and then you don't stick to it. Well, what was the point of the predefined levels anyway? So you have to look at it as either, hey, I took part of the position here. I'm taking the other part of the position. If we get there, if it runs, I don't get the second half. If it does, I get a better entry and better average, but make sure you're not just like bending rules because you don't want to get out of a trade yet or something like that. We do see some bearish divergence here and obviously playing out. I would suspect 305 would hold. I'm not sure that this 320 level will, but there's definitely still some potential. So we talked about Goldman Sachs, that SAC attack. Obviously, we talked about how it looked like we were likely headed up to a new high so that the retracement would actually make sense for like a 5-way structure. And then obviously that did not happen. So we're getting the other scenario, which obviously this was going to look super sketch because that's not deep enough of a retracement. So we had put our target down here at roughly like the 0.5. So while this isn't technically like a legit 5-wave Elliott wave structure because the 4 will have violated the 1, we're just basically using the tool to show like hypothetically what potentially could happen here. So again, retesting the 200 exponential and simple, basically is about to happen or in the process of happening. If that area right around here doesn't hold, we'll just be basically breaking back down below the 200s and then reconfirming back into the bear market. And that was it. So, a lot of stuff already moved a lot. This thing was almost back at its all-time highs. A lot of stuff didn't move at all. So CAT is still hanging on to these levels for now. If we lose this key support level, it's going to look very, very clearly like distribution or redistribution or something along those lines. My target's still around like 200 or so. But again, if we just go sideways here forever and these indicator oscillators keep resetting, this thing could just be recharging for the next leg up. So, I wouldn't count it completely out, but we do have this pretty big gap in the 200s down here. So seems like we come back down to all three 200s, 200 exponential, 200 simple, and also $200. McDonald's MDO looks like come back down to the 200s as expected. So we're almost there, 250. This thing was showing a lot of weakness after a lot of strength, obviously. So Amgen is next. So we're almost back down to the potential entry. We talked about the scenario where we basically come back down after the breakout, retest the break, and then look for that to hold the support. It also lines up with the 200s. And then the potential opportunity that awaits would essentially be the 1.618 Fibonacci extension and a nice trade setup, like 27% or so. So if you're already in the trade, back to break even. If you're not, maybe a second chance or maybe just a failed breakout, and that's a wrap. And we're just going back down from here. And I'm just clicking on all kinds of random stuff. So Microsoft, we looked at Visa. Okay, so we talked about Visa, the potential breakout of this resistance, how we needed to get above that white line right there. Couldn't do it. Printed some bearish divergence. Still holding above the 200s. If we break down from these levels, again, it's going to look like a failed breakout. If we hold above these levels, then we potentially get that leg up, probably to new all-time highs. So the next couple of weeks can be very, very important. I talked about this in advance, though, how I didn't like how soon everything was rallying months ago. And now after the 2+ months rally, everything's exhausted. There's no more room to run without actually being bullish on stuff. And that's my exact point. It was like basically the Christmas rally already priced in ahead of time so that by the time we get, within a few weeks of Christmas, there's nothing left. So it's like, oh, we just got our Christmas rally. We just got it like a month early, in my opinion. We'll see. So Honeywell right here, the W double bottom, the breakout, and now it's looking like the back test. Again, if this area holds 200 or the 200s, the triple trifecta of 200s, the moving average, the exponential moving average, and then also the actual price 200. Again, if that holds, potential for upside. This looks a lot like what we're seeing on Home Depot. we have technically a breakout. The area of the breakout needs to hold so we can get the measure move. Is it going to happen? You know, again, anybody that acts like they know for sure what's going to happen in these markets is lying to themselves or lying to you. It's all about the probability. So TRV traveler companies. So hanging out still at the highs right here. Got a decent amount of support at this level, but very much looks like it's coming back down to retest like 175. Very, very clear bearish divergence all over the place right here. Deer almost closed that gap, still a little ways away. We talked about the potential of this coming back down and that being a buying opportunity. If you're bullish on this thing, the gap close might be a decent place for a re-entry. If you're bearish on this thing though, get ready because we already have lost the parabolic ascending support right here. And if we break down from that one, which we're technically doing, and we come down and fill the gap, you know, technically the retest of the 200s is going to put us somewhere around like 383. So maybe it's time to actually say, hey, maybe I want to wait to jump into this one because now the markets don't look so hot. So what I was looking for the market to come to me before, actually I'm going to take a step back and make sure the market comes all the way to me. So, you know, do you have to do that? You know, are you going to feel bad if you miss out because you didn't stick to your guns? Well, not really. If, you know, the target is a 1.618 and it's just 56% upside instead of 40 whatever percent. We'll have to see. Could you still take that entry, jump right in and be ready to go? Sure, anything's possible. I don't really have an opinion one way or the other. I think the markets right now right now, the way the markets look, one of the most difficult times to pick a direction, honestly. I mean, the biggest thing is the Dow and some of those main names have been looking good, but everything else looks like trash. So it was really just about who do you believe, everybody or the Dow? And, you know, obviously I have stayed pretty bearish biased. And even a couple times where I did sound a little bit bullish, I, you know, caveat that with like a, hey, you know, don't get too caught up in this bullshit. So UUP, so this is the dollar. We talked about this potential trade. We're at the bottom of the channel. We're at the 200 moving averages. We printed some bullish divergence. Seems likely we're going to see a relief rally, at least back up to the top of the channel. If not, potentially, you know, an internal retrace. So we obviously came down here slightly lower than where we talked about that hypothetical low right here. So that actually puts the 0.5 closer to around like 29. A couple gaps in here as well. We'll see. I mean, if we come back up to the top of the range, it's going to be take profit at like 28.94. And then if we get the breakout, you know, likely 618 or 786 internal retrace. So we did a full breakdown of Lulu and Carvana. So we don't need to look at those. So let's look at some cryptos. Crypto Connect. All right, so that shitty bitty. So we got that little push up here, broke back down. 821 bear cross has confirmed again. So again, the exact same thing we have done all the previous times when the bull cross happened. We immediately just gave it back. Meltdown. We haven't had one of these big meltdowns yet. We haven't went to new lows yet, but we should be, you know, basically like aware that that is likely a possibility. A bunch of red histograms. We're still above the zero and the slope line. Hard sell signal. Stokes powerfully angled to the downside. 821 cross has failed. Again, this looks like a throw over, a failed breakout, you know, whatever tricky, fun nickname you want to call it. If we look at the longer time frames too, weekly looks absolutely terrible. We're at the lows. We're below all the moving averages and looks like we're ready for a meltdown. And then if we look at monthly looks absolutely terrible. Again, we're at the lows, the lowest low ever. If we just close today, and by ever, I mean like, you know, for a long time, but not good, not good. Still haven't quite made it to our target of 14K yet though. So, you know, it's not far from now though, if we continue on the current trajectory. Crypto still looks terrible. Ethereum looks bad, still off the lows, so it's better than most cryptos. Total market cap at the lows, just looking absolutely disgusting. It's basically just the Bitcoin chart, exactly. Bitcoin dominance chart, finally telling the truth a little bit, spitting a little bit of that truth. So we've been at the lows here and talked about how this was essentially painting a picture like, hey, this is not good for Bitcoin because all the altcoins are just stealing its life, sucking its life away, and nobody gives a shit about Bitcoin anymore. And now here it's looking like we're trying to form a bottom. And when we look at Bitcoin dominance, less stable coins, we see, oh wait, actually stable coins might be skewing the picture a little bit because Bitcoin compared to altcoins without stable coins, Bitcoin is much more bullish. We're well off the lows and we're confirming now 821 bull cross on the weekly. This thing looks like it's ready to come up here and retest the previous highs. 56. So that's like 10% more Bitcoin compared to altcoins. So get ready for another meltdown in your favorite altcoin. So cheese is next, that old chili cheese dog. So we talked about the bottom of this ascending broadening wedge and the potential of finding support at the 236. And here we have a aggressive sell-off down below that. So if that was your goal, if that was your target, if you're potentially considering this trade setup, obviously not looking so hot now. So we'll have to see where this thing goes. You know, if Bitcoin or these other cryptos start breaking down to new lows, I wouldn't be surprised to see that. This could also easily be a breakdown below a key level, a key, support, the 236, and then, potentially reclaim these levels and still get a massive move to the upside. So we don't want to rule out the possibility of a big move to the upside, but we had all the opportunity in the world to confirm into the bull market. We even did a couple times, and now we're losing key levels. So this basically looks like a failure or a, rejection. Solana looks terrible, still at the lows, absolute trash. Literally just probably just buy any other crypto from the top 100, but that. Obviously, it's not financial advice because I'm sure there's plenty of other ones that are as bad. Don't know how many that there are that are worse. And you're like, no, your man Moline Solana is going to be the future. Well, it's tied up in a pretty big scandal right now. So, Chainlink looking terrible at the lows. Absolutely horrendous. A lot of these cryptos just look absolutely terrible. Avalanche literally at the lows. Again, this thing tied up in a massive, massive crypto scandal. And you're like, well, actually, Avalanche isn't technically tied, and neither is Solana. Doesn't fucking matter. If people hear the name and then hear the whatever scandal, insert, Sam Bankman-Fried or whatever's going on right now, it doesn't matter if they're legitimately tied. If you can do the research and uncover why they're not directly tied to it, what matters is, are people buying or selling it? And right now, they're selling it because it's trash. Polkadot, trash, breaking down to new lows, complete garbage. Matic holding on for now at the 200 simple. We talked about the potential move back up here and another attempt at this. Look, I'm not going to lie. If Matic loses a 200 simple and Cheese has lost a 200 simple, there's not hope for much. Let's be real. That's two of the best cryptos, and they look terrible. This thing looks like it's ready for that next leg down to like 53 cents. XRP, last line of defense, the 618 and the ascending support. If XRP loses this level, likely going down here to like 25 cents. So if you're hinging on, some kind of XRP, legislation or regulation coming and, all of a suddenly like XRP is just going to like skyrocket to the moon because central banks and whatnot, just be real careful. It doesn't look good. It looks like it's ready to break the downside. It is at support. Maybe it pushes back up to 0.5 at 47 cents. Equal possibility, in my opinion, or slightly higher possibility because of the trend that we're actually going to 25 cents. So be careful you don't get your XRP kicked in. ADA, Cardano, absolutely terrible. New lows. Congratulations. You did it. Yay. You locked up your money and lost all your principal. No, you didn't lose all of it. Plus, I'm getting 8%. Dick. So congratulations on your 8%. In the meantime, you lost 91% of your principal. So if I told you, hey, how much money do you have in your bank account? And you're like, I have $100. And I'm like, oh, okay, give me that $100 and I'll give you $8 every year. And you're like, wow, that's a great deal. 8%. And then in the meantime, your $100 was now only worth $9. You only need to with that $8 that you earn, which is not even going to be $8 because you're down 91%, it's going to be like 80 cents. Now you just need to 10 extra money to get back to break even. So congratulations. You did it. You did it. You fell for a pyramid scheme. Woo! Congratulations. You got ripped off by a guy named Charles who live streams on YouTube about how much of a nerd he is. BNB. So this thing is a disaster waiting to happen. This is our air pocket, and we're literally, a couple dollars away from the air pocket. So we had an aggressive breakdown to backtest that descending resistance, coincidentally. And no, I did not move my lines. It just so happens that I have God mode turned on. And if you haven't watched a tutorial on how to turn on God mode for TradingView technical analysis, it's because there isn't one. You have to actually put in the work and just become really good. And then one day you can say you have God mode on. But, obviously there's no way to quantify that. So that being said, key resistance, flips, key support. This is it. If you don't hold the macro blue 236 and the descending resistance as support, BNB is going back down to retest the lows. And if BNB comes down here to retest the lows, aka the low 200s, it's probably a gigantic Adam and Eve double top getting ready to melt down about, I don't want to give you false numbers here, roughly 82% from where we're at right now. So get ready. If you're one of those people who says, I don't know, something about this Binance situation, I don't know about this Tether, I don't know about this Coinbase, whatever it is you're worried about, if that happens, this happens, okay? Or maybe in vice versa. Maybe this happens and then that happens. You're like, no, Coinbase is okay. And then Binance melts down and then Coinbase is like, actually, we're bankrupt. Just be careful. Just be careful. I think this is the next domino to fall. So, and maybe it doesn't. And this is just the best buying opportunity ever because it finds support right here. And then we surge to the upside. We go back into a bull market. Then there's a halvening. Then CZ comes out and buys his own country and they start using crypto in that country. And, you know, everybody just gets free hand jobs and whatever, just awesome stuff you could possibly think of. It's just steak dinners and hand jobs left and right. Oh, everybody wins. Maybe. Or get ready for the fucking meltdown of the century. Round whatever we're on right now, like 5. I don't know how many meltdowns crypto has had yet, but get ready for another one. So we did it. We made it through all the assets. Yeah. Nice and quick too. Your boy's getting fast. Doing all the static videos so we don't have to touch on like every single asset definitely helps. 51 minutes. That's not bad. All right. So Parag said earlier, what's up, Crypto Trend Trader? Happy holidays to you and your entire Crypto Trend Trader community. That's right, man. Happy holidays to you / Merry Christmas if you celebrate, and to everyone for that matter. What's up, Durwood? Good to see you. DXY static video was aces. Hell yeah, man. I'm glad you enjoyed that. A little more long term, so we'll get back into the short term in the next few days. Calma Betty says, what's up, Crypto Trend Trader? How are you? I'm good, man. I hope you are doing well. Also, I'm doing really well. I can't believe how soon Christmas is and New Year's. Insane how quickly this year has went by. Been a great year, though. I'm not going to lie. Probably one of, if not the best year. So BNB, Lazy Boy says, BNB looks like such a juicy trade. It does. It looks like a juicy trade in one direction or the other. And if you figure out if BNB is getting ready to go to, you know, steak dinners and hand jobs, or if it's getting ready to, you know, journey to the center of the earth, you let me know, okay? Because I'm not sure yet. But damn, if there's about to be some massive volatility in that thing, it's either going to double or get cut in half real quick. J-Hoff, and you know, my bet is to the downside, obviously, based on technicals. J-Hoff says, good stuff as always. Hell yeah, man. Good to see you. Glad that you're enjoying it. So yeah, we'll go ahead and wrap it up there. Appreciate everybody tuning in today. Sorry about the mic issues on last stream. Forgot to unmute for like 15 minutes. That was when we talked about all the important stuff. So if you didn't read my lips, you'll never know. But also, you can't see my lips. So I guess no one will ever know what I was talking about. But yeah, we'll go ahead and wrap it up there. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I'll catch you guys on Wednesday for the live stream as well. Been cutting down to like 2 live streams a week, trying to fill in the gaps of the static videos. So far, been pretty well received overall. So we'll see. But yeah, we'll wrap it up there. It is 8:56 p.m. Eastern Standard Time on 12/18/2022. I am, of course, Crypto Trend Trader, and this is our Sunday evening market look ahead. But that's it for today. Streaming on Christmas. I don't know. We'll see, man. Markets are closed, but what, Christmas is on a Sunday. Yeah, maybe. We'll see. I might just do a quick stream on Christmas. You know, I miss you guys. So, yeah, I would count on it. If not, I'll let you know the stream ahead of time. So that's our Sunday stream, which we haven't missed a Sunday stream in like a year. So I don't see any reason why we got to miss this one. But yeah, we'll go ahead and wrap it up there. Obviously not financial advice. I'm not your financial advisor. The markets are extremely volatile. Please do your own research, trade responsibly. Good to see everybody. J Hoff, Lazy Boy, Calma Betty, Durwood in the house, and of course Parag as well. And I'll catch you guys on Wednesday. That's it for today. Crypto Trend Trader, and I'm out of here.